Despite basically everyone saying making tax digital is going to be a disaster, the government has confirmed that MTD for income tax is definitely coming from April 2026. If you're a sole trader or you're a landlord earning over 50k, everything changes. Letters are landing on doormats across the UK right now, and if you've received one of these, HMRC have you in their crosshairs. I'm going to break down what MTD actually means for you, how much it's really going to cost you, the penalty regime they're not telling you about, and crucially, the legal escape route that could save you from this nightmare completely. Making tax digital for income tax, or MTD for short, is the biggest change to self-assessment in over 30 years. And it's been a decade in the making. This was first announced back in 2015, originally planned for 2020, delayed because of COVID, and then delayed again in 2024. And there have been countless petitions to stop this, which have just been rejected by the government. They've basically had 10 years of everyone saying this is going to be a complete disaster for small businesses, but they're still pushing ahead anyway. So right now, you do one tax return a year. You've got until January 31st to get it all sorted, nearly 10 months after the tax year ends. That's all going away. Under MTD, you're doing 5 submissions to HMRC every single year. 4 quarterly updates of your income and expenses, plus your annual declaration. You must use approved software, and HMRC is not providing free software for this. You're being forced to buy software to do what you could have done free before. The government claims this will help you stay on top of your tax affairs. Let's be real, this is about HMRC wanting more control, more data, and more opportunities to catch you out. So the rollout is gonna happen in 3 waves. From April 2026, yes, that is just months away. If your combined gross income from self-employment, property exceeds 50k for the tax year 24-25, and that is the tax year you've either just done or you're about to do, then you're in the MTD net. That's over 850,000 people in the first wave alone. From April 2027, the threshold drops to 30k. And the spring statement confirmed this. From April 28, it drops again to just £20,000. So here's what catches people out. We're talking about turnover, gross income, not profit. This is before you deduct a single expense. Let me throw some numbers at you. The average sole trader profit in the UK is between 21 and 28k. 60% of sole traders make less than 10k per year. These aren't wealthy business owners. These are ordinary people trying to make a living. So now let's talk about what the government announced in the November 25 budget. They made a big deal about a soft landing for penalties. No late submission penalties for your quarterly updates in the first year. Sounds reasonable. Sounds like they're giving you time to adjust. But here's what they're not telling you loud enough. Late payment penalties, those still apply, and they're pretty brutal. From April 2025, if you're even 15 days late paying your tax, that's an immediate 3% penalty on what you owe. At 30 days late, add another 3%, so that's now 6% total. And after 31 days, they add 10% per year on whatever's outstanding, and that accrues daily. On top of that, interest charges. The Bank of England base rate plus 4%. Right now, that's 8.5% interest on any unpaid tax. So let's look at some figures. Say you owe 5k in tax and you're struggling with cash flow, you're 35 days late. That's 3% at day 15, £150. Another 3% at day 30, that's another £150, plus 10% per year kicking in from day 31, plus 8.5% interest. For being just over a month late, you're looking at more than £300 in penalties before they even apply interest. And here's the real agenda. HMRC knows people miss deadlines. In January 2025, 1.1 million people missed the self-assessment deadline. Just under 750,000 filed on the deadline day itself, and 32,000 filed between 11 p.m. and midnight. That's one deadline a year. Now multiply that by 5. 4 quarterly submissions plus your final return, 5 opportunities to miss a deadline, 5 opportunities to rack up penalties. They're forecasting an additional 780 million in tax take from MTD. Either they think you're suddenly going to become profitable by doing a bit more admin, Or what they're really banking on, they're planning on collecting a fortune in penalties and interest from people who inevitably miss these deadlines. This isn't about helping you manage your tax affairs. This is more like a penalty revenue generator. Let me paint a picture of what your life looks like under MTD. Your quarterly deadlines are now 7th of August, 7th of November, 7th of February, and 7th of May. That's roughly 1 month after each quarter ends. No more generous January 31st deadline for everything. You've got deadlines scattered throughout the year. For each submission, you need all your income recorded digitally, all your expenses categorized, all put through approved software. Your paper records, your basic spreadsheets, they won't really cut it anymore unless you buy some bridging software to connect them to HMRC systems. The two big account platforms, Xero and QuickBooks, they will work, but they cost money. We're talking about 20, 50 quid a month, depending on what you need. That's 240 to 600 pounds a year just for software. And that's before you even think about getting some accountancy support. And here's the frustrating part. At the end of the year, you still have to do your annual declaration. You're not replacing one return with four, you're adding 4 quarterly submissions on top of your existing obligations. 5 submissions instead of 1 for the exact same tax bill. For sole traders who currently spend a weekend in January sorting out their taxes, maybe a long day going through receipts and bank statements, you're now looking at several days of admin spread across the entire year. That's time you're not earning money, not spending it with your family, not spending it actually running your business. Right, now for the bit you've been waiting for. How do you legally avoid this mess entirely? In July 2025, HMRC confirmed that limited companies will not be subject to making tax digital. And they've got no plans to change this. Let that sink in. Sole traders, landlords, hammered with quarterly reporting. Limited companies, business as usual. 1 annual filing, no quarterly submissions, no software changes. So for many people caught in the MTD net, incorporating, forming a limited company could be your legal exit strategy. Now, I have to be clear, incorporation is not right for everyone. There are costs involved, you've got company's house filings, potentially more complex accounting. If you're only just over the threshold and your income fluctuates, it might not make sense. But here's the thing, for many people, it's not just about avoiding MTD, the tax structure is often better. As a sole trader, making 50k profit, you're paying roughly 9,800 in income tax. As a limited company with the same profit, structured properly with salary and dividends, you could be paying significantly less. Plus, you get access to legitimate tax planning opportunities that simply aren't available to sole traders. So think about more complex pension contributions through your company, properly structured expenses, timing control of actually when you take income and therefore when you're taxed. And we've incorporated more businesses in the last 6 months than in the previous 2 years combined because people are waking up to what's coming and they're taking action. So you have to remember the 24 to 25 tax return, which is due 31st of January 2026, is going to decide if you're in MTD or not. So you need to make sure you calculate that properly and then make the decision about incorporation before the deadline to avoid MTD. Now let me share something that's been on my mind. Look at the pattern here. MTD thresholds 50k, 30k, then 20k. There's been persistent speculation about cutting the VAT registration threshold. The Resolution Foundation suggested dropping it to just 30k. They reckon it could raise 2 billion a year. See where these numbers align? 30k for MTD in 2027, potentially 30k for VAT. It's not really a coincidence. Think about it strategically. They get everyone onto digital systems, quarterly reporting. Once you're in that regime, adding quarterly VAT returns isn't going to be much extra. You've already got the software, you're already doing the digital record keeping. And here's the cynical take. What happens when you make being self-employed so administratively painful, so financially risky with all these penalties that people just give up? They go back to employment, PAYE, tax deducted at source every month automatically. No quarterly returns, no penalties, no chasing, just predictable revenue for HMRC without having to lift a finger. There are 4.4 million self-employed people in this country. Eventually, most of them will be dragged into MTD. Millions of people spending more time in compliance, paying more in fees and more in penalties, and who's going to benefit? It's not the small business owner. Right. Here's what you need to do. First, check if you're in the net. Look at your 24-25 figures, combine gross income from self-employment and property income. If you're over 50K, you're in from April 2026. If you're over 30K, you're in from April 2027. Don't wait for HMRC to tell you this. Work it out yourself. Second, if you haven't submitted your 24-25 tax return yet, be careful about what you're declaring. Make sure your income figures are accurate. Don't overstate income and accidentally walk yourself into MTD when you shouldn't really be there. Third, consider your options. Is incorporation right for you? Talk to an accountant who actually understands this. Many are struggling with MTD. We've spoken to accountants who are actually retiring early rather than deal with MTD. So make sure you're getting advice from someone who knows what's coming. Fourth, if you're staying as a sole trader, start getting your systems ready now. Don't wait until April 2026. Get on accounting software, get comfortable with it. There's going to be a learning curve, and you don't want to be scrambling around when deadlines start hitting. Fifth, mark those deadlines. The 7th of August, the 7th of November, the 7th of February, and the 7th of May, plus 31st of January for your annual return. Set reminders, multiple reminders, because under this new regime, forgetting isn't just embarrassing, it can be expensive. Look, I know this is a lot to take in, and I know it feels like yet another burden being dumped on small business owners who are already stretched thin. That's why we've created a free MTD action plan. And it's not just generic information you can find on HMRC's confusing website. It's a practical step-by-step guide based on what we've learned, helping hundreds of businesses navigate this. It includes a readiness assessment so you know exactly where you stand, a timeline of what you should be doing and when, a software comparison guide, and templates for managing quarterly submissions efficiently. Download it free, the link is in the description below. And if you're watching this thinking, I need professional help with this, we offer a full business MOT, and it may be worth even an accountant putting together your 24-25 tax return. We'll look at your situation, help you decide whether incorporation makes sense for you, and then build a plan that works for you. Book a free consultation. Again, it's a link below. If you know other sole traders or landlords who need to hear this, share this video with them. Most people I speak to have no idea this is coming, so don't let them be blindsided. Drop a comment below. Tell me, does MC affect you? What's your plan? Are you going to try and ride it out, or are you going to try and incorporate to avoid this completely? Thanks for watching.